The Trump family has generated over $2 billion in crypto profits while we, the poor folks, are counting our pennies in this brutal bear market. Inflation in America has jumped to a 3-year high, which is generally bad news for Bitcoin, but the President of the United States said he loves it. Meanwhile, tensions in the Middle East are escalating and could trigger another correction across the entire market, and one very interesting factor suggests the bottom is still ahead of us. Stay with us until the end of the episode because we will also have to talk about Hyperliquid and Solana. And please be so kind and generous as to hit the like button, leave a comment and subscribe to the channel. The well-known Trump family is once again in the spotlight after it became clear that the crypto projects associated with them have brought in a total of $2.3 billion in profit. The main driver of these revenues is World Liberty Financial, a project that raised around $1.4 billion from the sale of 30 billion tokens. According to estimates, almost $1 billion of these funds went to companies and structures linked to the family. And that's not all. Additional sales of another 3 billion tokens likely push the amount even higher. The second major source is the Trump meme coin, which has generated approximately $1.2 billion in sales. Of that, around 616 million is believed to have gone to the family's interests. Analysts cited by Reuters noted that the early activity around the token was unusual for a project at such a stage, raising questions about insider selling. The picture is completed by companies like OutSigma, later renamed AI Financial Corporation, which purchased over $700 million in WLFI tokens, with more than $500 million of them flowing to the Trump family. American Bitcoin also contributed. Family members received stakes at no direct cost, and Eric Trump's position alone is valued at over $70 million. While the family's profits grow, investors experience the opposite. WLFI buyers have incurred around $674 million in losses, as a large portion of early tokens are locked and effectively have no value until they unlock. The Trump token also collapsed from around $50 last year to below $2.50, resulting in over $700 million in investor losses. Public companies tied to the ecosystem have also fallen by 80–90%. We largely remain on the Trump topic because we'll talk about the new wave of escalation in the Middle East. Iran and the US exchanged strikes for the second day in a row, with the Asian country once again declaring the Strait of Hormuz closed. For his part, the President of America, who for who knows which time already threatened Iran with brutal strikes, said that despite the blockade, American forces managed to pull 100 million barrels of oil through the important maritime channel. A complete mess which can only add more pressure to the financial and crypto markets if it's not resolved soon. Another factor that could negatively affect Bitcoin is rising US inflation. Yesterday's CPI report showed that the rate for May rose to 4.2%, the highest level since April 2023. Meanwhile, core CPI, the index that excludes food and energy prices, climbed to a 9-month high of 2.9%. As you can imagine, the Federal Reserve is unlikely to be pleased with the data and may take further measures, such as raising interest rates, to push inflation closer to the healthy 2% level. This, as you know, would reduce interest in risk assets such as cryptocurrencies and could have a negative price impact. And while the Fed is probably already thinking about how to respond, Trump called the inflation increase great, saying he loves inflation. What exactly he loves about it, only he knows, and I personally couldn't understand his arguments to the journalists who asked him about it, since in his typical style he jumped from topic to topic without offering much clarity. Although it didn't fall that low last week, Bitcoin came close to a very important level, the realized price around $53,600. This is the average price at which all holders bought their coins. In previous bear markets, when the price reached this level, massive selling at a loss usually began, and this flush marked the true bottom. However, we still haven't seen anything like that in the current cycle. In the major capitulation of 2022, investors sold 1.2 million bitcoins at a loss, this time only 187,000 coins. In other words, we reached the zone where people usually sell, but very few gave up, and there is no mass panic. The problem is different. The buyers are gone. Last week, demand dropped by 652,000 bitcoins, the biggest decline since early 2022. Even the ETFs, which were the main driver of the rally, recorded their most negative flows since launch. In other words, Bitcoin isn't falling because people are selling, it's falling because there is no one to buy. And there's another important detail. The market's average price is $53,600, whereas Strategy's is $75,700, meaning even the big players are at a loss while most investors are still in profit, which suggests that real selling pressure may still be ahead. Hype, the cryptocurrency of Hyperliquid, was one of the few exceptions in the falling crypto market after hitting a new all-time high earlier this month. Just days ago, the token traded above $75 and its market cap approached $17 billion, placing it among the 10 largest cryptocurrencies. However, the combination of a strong bearish market and Arthur Hayes' sale of his positions reversed the trend. The coin is currently worth around $56 with a market cap near $12.5 billion. Some analysts believe a deeper decline is coming. Altcoin Sherpa notes that cooling off is normal, but if the price drops below $54, it could move toward $44. Another popular analyst, Batman, sees a clear formed head and shoulders pattern, a classic formation that often precedes a drop, and according to him the next stop could be $50. Out CryptoGems shares a similar view, saying that if the pattern breaks down, it won't be good. Even traders are now betting against the token. Crypto with Harris revealed he opened a $30,000 short, expecting a drop toward $40 if hype breaks below 55. Still, there are positive signs. In recent weeks, large amounts of hype have been withdrawn from exchanges into self-custody, reducing immediate selling pressure. We'll finish today's episode with Solana, which has also been bleeding heavily lately. Earlier this month, SOL fell to around $60, its lowest level since the end of 2023. It is currently trading around $65, which is a 33% monthly drop, and its market cap is now below $40 billion. Despite this, some analysts see early signs of a potential reversal. Ali Martinez pointed out that the TD sequential indicator has flashed a buy signal for Solana, something that historically often precedes a short-term recovery. According to him, the price could head towards $77 if the signal is confirmed. Another important indicator is Solana's RSI, which recently dropped to around 15, the lowest value in the asset's history. An RSI below 30 means the asset is heavily oversold and often precedes a bounce. Ex-analyst Henry is also optimistic. According to him, Solana could form a W-shaped recovery above $88 as long as the bulls reclaim the $80 level. Of course, not everyone is so positive. Some market participants expect more pain. Ex-user Cyclop predicts a short-term drop to $30–40, levels not seen since October 2023. In the long term, however, he remains optimistic and sees potential for a recovery to $300 within the next 1–2 years. There is another worrying signal. In recent days, investors have started moving SOL from self-custody back to exchanges. This increases immediate selling pressure. Additionally, institutional interest is weakening. Flows into spot Solana ETFs are negative, forcing major managers like Fidelity, Grayscale and Invesco to sell real SOL to cover outgoing funds.